Good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for the next hour and a half. And hooray, I finally have a data flow. I've been struggling with my data this week. The last couple of sessions we haven't been doing anything because my data has been messed up. But it looks like everything is in sync this morning. And yeah, somebody tell me if my data is not matching yours, but right now it looks like the NASDAQ trading around 44.71, give or take a tick. All right, you guys. A real quick overview for those of you new to the room. This is the diversified trading system. And what you're looking at here is the NASDAQ. I'm also following gold and crude oil. But I can pull up any chart which is of interest to you. Perhaps there's Forex, some Forex traders in the room and you want to see some Forex pairs or even some stock markets. If I can get it on my data feed, I'll certainly show it to you. The diversified trading system is diversified because we're looking at the market from 3 different points of view. So we've got the Hawk Scalper here on the top left, the Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor the bottom right. What you're going to see is that all the signals pretty much develop the same way, regardless of the tool. So what we're looking for is confluence, namely, here let me find you something that's a little bit more obvious. Namely, we're looking for confluence like this. So we have a green trend line, we have green bars, green filter, and a green signal. Now the signals always tend to develop first with a warning dot and an audio alert, and then when the signal is complete we get a triangle and a hash mark. There was a warning dot when this one printed, however it must have been absorbed as the signal bar was printing. That does happen occasionally. All right, so we've got the open. This is the Falcon Swing Trader. We're down here now on the secondary support line. These horizontal lines that you see here, this is part of the Ultimate Support and Resistance Suite. This is an add-on. This is something that you can use on any chart, not just a DTS chart. You can use it on a 5-minute chart or an hourly chart if you like, or whatever your flavor may be. So we're taking a little bit of a bounce off here, almost looking like a double bottom, almost kind of sort of. Not really sure what to expect from the market today. I've been looking at the chart from yesterday and the day before. We have slipped a little bit lower, but for the most part, price is more or less sideways, really. Swings up and down. If that's going to continue to move within a trading range, we'll likely see more of the same today. Okay, we're working on a possible trend change signal now. So the trend line has changed color. Our filter has already become more bullish, and now we're just going to be on the alert for a possible signal there. The Hawk Scalper here moving into yellow bars. We did get a first micro-macro cross signal here in the wee hours. And the first micro-macro cross, very easy to identify on your Hawk Scalper. It begins with the micro line crossing the macro, and it's the first signal where everything is going to be in sync. So we've got red bars, red trend lines, red filter, red signal. That's a sell signal for us. Now we're working on a green bar sell. These tend to develop toward the end of a trend. I might throw a onesie on this just to see where it's going. And obviously to demo the room as well. So the green bar sell, Oh, there we go. We're changing the parameters a little bit here. We're going to try it like this now. The green bar cell, we've got green bars, a red warning dot, which tells us we're going to get a red sell signal here if the prices head lower. This tool that you see me using here, this is the Trade Manager. This is a very, very important tool. This tool helps you control your risk, and it gives you 16 different stop strategies to choose from. I don't have my stops enabled just yet. I'm placed my stop up here to hold it, but I'm going to show you how this works here in just a moment. In fact, if we do get filled here, I'll remove the scalp target and I'll show you how the stops work, the automatic stops. These blue dots that you see here. This is the stop strategy. Right now I've set it on the ATR. You can customize each of them. You can change the parameters. But I'm going to turn that off for just a moment. What I'm looking for here is what we refer to as a test to the extreme. It's essentially a retest of this low. And that tends to happen whenever the market is reversing. Although this isn't a very good example here. We have pretty much a V bottom as the market reversed. But this is a let me see if I can find it here. This is really what we're looking for. We're looking for the market to come down. Now we're looking for this leg here to retest, in this case, the high. And then the market starts to fail. We start to take out lows. And then all of a sudden our bias shifts. We become more bearish. So that's what I'm looking for here now. Here, one sec. So I'm looking for this retest, and we hit our break-even trigger. I'm going to try, I've just deleted my profit objective, and I'm going to try to show you how these stops work. So I'm going to use the parabolic system. Now the stops are going to be maintained by these blue dots. I've already hit my break-even trigger. That's why my stop is already down here at the break-even. Oops, sorry, wrong thing. But if this trade continues lower, you're going to see, aha, there we go. Now the parabolic, the stop strategy has picked up my stops. And if we happen to continue lower here, we're going to keep rolling them stop for stop. Or pardon me, we're going to roll the stops dot for dot. There we go. And like I said, there's 16 different stop strategies here that we can choose from. So we can select whichever one we deem appropriate for the current market condition. Okay, so we've got a nice little scalp trade going on here at the moment as the market is just kind of drifting sideways. We actually got in a little bit lucky here because while we were looking away, our warning dot actually disappeared. The signal actually never fully printed, but it did work out for us regardless. Now we're working a first micro-macro cross signal. This is one of our high probability signals here on the Hawk Scalper. I would probably take it below the low, however. I don't think I would take this one just on the hash mark just yet, in case this turns out to be a double bottom. All right, so there the market retreated a little bit, hit my stop strategy, and you can see the trade manager canceled my trade. It flattened everything for me automatically. Let's take a look here at the Eagle Trend Trader here on the NASDAQ. We got a little bit of a hard edge bounce signal right here. This is the same one or similar to the signal that we would have taken on the Hawk. It was against the ATR, so a little reluctant to take that one right there. Yeah, the eagle just really drifting sideways here. Just take a look at the eagle. We do have some follow through, but really it's not like it's a full-on trend. Here we had a little bit of a trend a few days back, but right now things just kind of sideways. This tool you see up here in the corner, this is the Trade Forecaster. This is again one of these system add-ons, and the Trade Forecaster tells us what the current market condition is most likely to be and what the next one is most likely to be. So right now it says we're in swing mode, which yeah, I can see that, with scalp mode hot on the heels in about 20 minutes time. So if you were looking for a big breakout of sorts, we might not be getting it. At least not according to the Trade Forecaster. And while we're waiting, let's take a look here at the Hawk, or pardon me, doggone it. You miss a couple days and you start calling the tools by the wrong names. This is the Raptor. The Raptor is unique in that it's a blend of the other three trading tools all into one chart. So it incorporates elements of the Hawk, the Falcon, and the Eagle all into one. The Raptor, part of the impetus behind developing the Raptor was really some of our owners came to us and said, you know, I'm trading off of a laptop and I don't have a lot of real estate. Is there a way we can do everything on one screen? Well, that's how the Raptor kind of got developed. It's kind of like a hybrid, if you will. So it incorporates, like I said, elements of all three birds into one. You can see we've got the clouds here off of the Eagle. The whole Eagle trend trader is programmed into the filter down here. Tony asks, Eric, what are your cloud settings on the Raptor? Because mine look a little different. Okay, so the one cloud I have set at 12 ticks. The other cloud I have set at 8. The nice thing about the Raptor, which is not available on the other DTS birds, is you can actually change your parameters. So if the market you're trading, you know, you want to get fewer or more signals even, you can tweak the parameters a little bit to get you that type of response. That's not something you can do with the DTS system. The DTS system is fully locked. Oh, sorry, not the Raptor, but the Eagle. Hold on one sec, Tony. I will go look. I thought my Eagle was just the default. Yeah, it should be 12 ticks. Oh, sorry, it is. Right here, 12 ticks. The Eagle, everything, like I say, is pre-programmed, so you would adjust your parameters via changing your brick size. The mean wrinkle bars that come standard with the DTS system are a hybrid of the traditional wrinkle bars and candlesticks. So you kind of get the best of both worlds there. Okay, Ivy asks, how do you get the system? Well, quite simply, Ivy, you just go to Indicator Warehouse. And one second, I will show you. while the market is still kind of chippy. All right, so if you go to indicatorwarehouse.com, there's lots of information here about the DTS system, and you can follow any of these links, and if you want to talk to somebody about it, hit the contact us, and Adam Halpern, the owner of Indicator Warehouse, will give you a call and answer any questions you might have. So indicatorwarehouse.com, and before I put it away, I'll show you this. Some of these add-ons and things that you're seeing, if you go to the website, well, first off, you can get specific information about each of the tools here: Diversified Trading System, the Raptor Trading System. There's a whole slew of free trading videos. But what I want to point out is the system add-ons. If you follow that link, all these tools that you're seeing here today, this is where you can go to find out more information about all of them. All right? Thanks, Tony. That's why we're a little on the slow side. FOMC meeting today at 1400 hours, 2 p.m. That will put the crinkle in things. Ivy, no, this is a purchase system, Ivy. No, this is the reason we're doing the room is because there is no trial with the software, and I'm here to show you how the software works and to answer any questions you might have. So if the market doesn't give us a decent signal here soon, I'll just take some signals so that you can see how everything works. Right now, how do I know the market's not giving decent signals? Well, we can kind of look at our tools, and you see here on our hawk how our bar colors they're changing, they're going back and forth, back and forth. We got a lot of yellow bars. Everything is out of sync, right? Filters are out of sync. It's starting to look like a checkerboard down here. The bar colors are all out of sync. The trend lines are all out of sync. That tells us we're in a choppy market. Now, people always ask, well, how do you trade a choppy market? Choppy market's very, very difficult to trade. Half of the battle is recognizing that you are in chop. So once you're in a choppy market, the best course of action, unless it's a very large trading range where you can sell the highs and buy the lows, the best course of action is just to let the market get out, break out, get outside of that range, and it will produce another signal, right? And same thing to the downside. Let it break out of here. It'll retest the range. It'll come out. You will get a signal. So we're looking like we're a little bit in transition here at the moment. So we don't have any clean signals per se. This is technically a first micro macro cross. I'm going to let that just kind of hold on for a sec. Well, TCAT says here, that tells me your system doesn't work. Well, yes and no. You can only take what the market is giving you, right? This isn't like working on a factory floor where the more you make, the more you earn. If the market's prepared to go sideways, yeah, you can maybe micro scalp out of here, but really all you're going to end up doing is making money for your broker. What we want is we want some quality trades. So here was that first micro macro cross. I said I was going to hold off on taking it, but it has hit our high probability profit target. The reason I wouldn't treat this as a quality trade is because we're still within this larger trading range. Okay, now that, but the signal, you know, it did work. There's a high probability signal for you. And I think Tony's a member here. He makes a good point. He says that, you know, you still have to, it's not magic. You still have to trade. You still have to interpret the signals. This is not a black box system, folks. It's a very high probability system. It can be a very profitable system. Right here, while I was chatting away, we had a soft edge buy signal on our Raptor. This is a signal, it's essentially a counter trend signal. Actually, we had two of them. We had one right here as well. This one developed a little bit early, took a little bit of heat on it, and then it also followed through. The soft edge buy develops as the market is slowing and possibly changing direction. It gives us this telltale retest, this test of the extreme, the failure, and then we anticipate the market to move the other way. But like I say, so long as the market is moving sideways, it's going to be difficult trading. I don't care what you're using. Sometimes the market just isn't offering up anything worth taking. You know, the algos are there. They're parked on either side of the obvious swing highs and lows, and they're just there to churn you and burn you. Okay, some great questions here. If you've typed a question, just bear with me as I get to your question. Chris asks, is there a performance record and what are the results? Okay, we've got a breakout here, so I'm going to try to keep one eye on that while I answer Chris's question. If you go back here to the Indicator Warehouse webpage, we do have, shoot, where did he put it? There is the information here somewhere. What I've done in the past is I've done what we call a profit run. And we did this when the DTS system first came out. And the point of the profit run was to show that it actually works. No, is that where he had it? Okay, I'm not going to waste a lot of time on this because I'm having a hard time finding the link. Maybe it's all right. I'm gonna find it and bring it back for you. But it's on the website there somewhere. And really what it is just the trading results from the profit run lasted for 2 months. And we've done 3 of them so far. And fortunately we had good results every time out. Well, that's a mystery where Adam put those, but I will find it for you before the end of the session today. Okay, working a possible cloud crossover signal here on the Raptor, And again, what I'll do is I'll show this to you because we're a little bit slow here today, but you see how we're getting a warning dot? With the cloud crossover, what happens is the clouds cross over, and normally we anticipate the market to drift into the cloud, and then it comes out of the cloud. The cloud will actually offer support to the market, and then we're going to produce our signal. So that's what we're going to look for. This may be a little bit early for a cloud crossover, but what I'm going to do is I'm going to look at it anyways, just so I can demo it for you. The tool I'm using here is, it's called the Trailblazer. It's very similar to the Trade Manager, but you're going to notice it doesn't have that risk component down here, that built-in risk component. You set up your trades up here. The nice thing with the Trailblazer is it's a one-click entry system. So you see I've got a couple warning dots already. What I'm waiting on is the triangle and the hash mark. And I can either enter via the buy market button or sell if I wanted to, but I can enter through the buy and sell market buttons, or I can also right click and bring my order in to where it's going to fill. So these little shaded numbers that you see above and below the bar, this is called the logic counter. And that particular tool just tells me where the range of this bar will finish. So I know that the high of the bar will be 44.8350. Therefore, I can place my buy stop 44.8375. This tool you see right here, this is a cool tool. This is the Geiger counter. It's essentially a tape reader. It gives you the immediate order flow, and you can see the history of the order flow. We're kind of waffling here. The sellers sell a little bit, the buyers buy a little bit. The sellers sell, the buyers buy, right? So it's just drifting back and forth. This dial around here I find very useful. This dial shows you the current buying and selling. So right now, when the dial pulls hard to one side and stays there for like 3 or 4 or 5 seconds, that tells you that the buyers are chewing through a lot of the orders, or in this case, the sellers if it drifts here to the short side. Okay, so now we have our complete signal. And what I would really like to see is, there we go, get that wheel over there to the buy side and just stick. So long as it's moving back and forth like that, they're going to be waffling a little bit. There we go. Get that wheel over there. Come on. There we go. And I want to hold and hold and hold. Oh, should have held just a little bit longer. And that pretty much tells you that the buyers are really just chewing through those orders. All right, so the signal hasn't completed yet, and now we're getting the more textbook look to the cloud crossover. We're going to see the market drift now into this cloud, and we're going to hopefully see some support come out of that cloud. All right, so this order is live, by the way, so I'm looking for the next signal to bring it down. But before I do that, it looks like we have a moment. I finally found the results for the profit run. So the idea with the profit run was, the first one we started with $25,000, and over the course of 2 months we managed to run that up to $46,120. And you can see all the results here. So here's the results kind of tracked over the course of the profit run. Then we did another one, and that one fortunately was also positive. And then we did a third one. Oh yeah, Omar did one as well in the Forex. So there's several here for you to look at. All the videos are available if you actually want to sit through and watch all the videos. But that's at indicatorwarehouse.net. That's what threw me. It's not the .com site, it's the indicatorwarehouse.net. The indicatorwarehouse.com is this one right here that we were looking at. Oop, there's our signal. I'm going to pull this down now. We'll enter on a second push. Now notice what happened here is the order got engaged and automatically I got my profit targets, I got my stop loss. This is the benefit of the Trailblazers where all this is automated for you. It's a one-click system, but you do need to know more or less what your position size should be. Now notice how the trail or the trade manager portion took my stop from down here and automatically rolled it up here. I'm using the swing strategy, and based on my parameters here, it has set it, we'll give it a little bit more room, and it's swung it up below this swing low now. All right, so it's taken my initial risk and pretty much cut it in half. This is the little stumbling block right here, obviously 44.83 half. We need to see them tick above there. They're probably going to be reluctant to do that given that it's the top of the hour and we're near yesterday's highs as well. So this is kind of within yesterday's trading range. If we do manage to break out here though, off of this cloud crossover signal, actually, you know what I'm going to do? I'm going to, oh no, I'll leave everything in because I have a runner in play. I really like to show people how these stop strategies, how they're automated for you. So we'll see whether or not this gives me another opportunity to do that. Oh, way to go, Tony. Tony bagged 4 contracts on the NASDAQ macro pullback signal that just developed. Well done. So that's this signal right here, the macro pullback. Yeah, pretty easy to identify. It occurs when the market pulls back to the macro line. That's this thick one. This is on your hawk scalper now. Everything stays in sync except the micro line. This is also one of our high probability signals that we look for. And you can see that had some pretty good follow through to it. And Tony nailed 4 contracts there. Nicely done, my friend. Some people get confused. They say, well, how do you make sense of all the different signals that you're seeing? And, well, for one thing, we have a trading room every day. As a DTS owner, you're entitled to attend. But we also have these cheat sheets that show you the high probability signals. So here are the high probability signals on the hawk. And these are the signals that we're going to be focusing on. Right, so there's really just 5 signals that we concentrate on. You'll notice there were signals printing here. We didn't take those because those weren't high probability. We didn't take these yellow bar signals because they're not high probability. All right, so we tend to focus on the more probable signals. And we also have one of those here for the Falcon swing trader. And you can see there's 3 high probability signals here that we focus on with the Falcon. So what we're trying to do is we're trying to take advantage of those high probability opportunities when they come our way. Notice this little buying spike that was here. This was what pushed us up through the highs here at 44.83 half. We've since hit our break-even trigger, so my stops have come down here from the lows to the break-even. With a little bit of luck, we'll continue to hit our first high probability profit target. And after which, oh, you know what? Maybe I'll go to something more aggressive now. Why don't we go to maybe an ATR stop, and we'll change it to 3, just to give it a little bit of room. I can also make the trade, force it manually to break even by hitting the break even button. I know, lots to show you. I'm doing my best to not confuse you. Let me see here. There's more questions. Okay, Chris asked about the performance record, so I finally found that. Yeah, Ivy makes a good point. Ivy says, I always lose money in the sideways chop, and that's the problem, right? If it's an established trading range, go ahead, you may try to buy the low, sell the high. You may try to, get in down here and sell up here if it's an established range. But if it's a tight little sideways range, just leave it alone. You're playing with fire. Mike asks, isn't that a sell signal at 639? Okay, I'm not entirely sure which tool you were referring to, Mike, but let me take a look here. Yep, 639 right here. You're probably referring to the hawk, and what we're looking at here, this is a first micro macro cross signal. It didn't trip, but yes, it is a sell signal. Now, the hash marks are really just a suggested entry. It is okay to use some common sense. Now this one, it didn't really matter because the signal did not engage. But if I took this signal right on the hash mark, I would definitely put my stops above that swing high. Realistically, what I probably would have done is I probably would have offered up 2 or 3 ticks and entered below the low and maybe put my stop a little bit right there, just to avoid one of those one tick trends. You know what I mean? Like the market comes down and just engages the order by a tick or two and then starts to go the other way because all the buyers start to buy up the market again. But yes, well done. Absolutely correct. That is a sell signal, and that is a first micro macro cross signal. That tends to be one of our higher probability signals. However, this one never engaged and kind of drifted a little bit. The one point I should make here about the trade manager and this whole concept of containing your risk to only 2%, what a lot of people do incorrectly is they will, here, let's actually use this as an example. What a lot of people do incorrectly is they'll place their stops really, really tight and try to control their risk that way. Well, what ends up happening is that, I know we didn't get engaged here, but I'm just using it as an example. What happens is that very often you'll get brought into a trade, you'll get brought into a trade and then a few bars later you'll get stopped out. What the trade manager does is it controls your risk to a preset amount. I have mine set at 2% of my capital. Anything less than 5% is considered prudent, 5% or less. But watch what happens here. If I set my stops really, really tight, I'm risking $300. Now don't fall out of your chair. That sounds like a lot of money to you. $300 is 2% of my capital. But watch what happens if I place a deeper stop. Oh, the risk is still $300. What if I place a deeper stop still? What if I go way up here? Oh, the risk is still about $300. So you see, my risk never changes. But what does change is the quantity, right? I'm only risking one contract way up here, But if I frame the trade like this, I'm trading 6 contracts. But the risk, the amount I can afford to lose, never changes. That is a very, very important concept. If you take nothing else away with you today, remember that. Never risk more than you can afford to lose. And the trade manager automates that process for you. It never allows you to risk more than you can afford to lose. So if you misinterpret a signal, or if you did something incorrect, or hey, the system's not 100%. Let's say, and I hate to break it to you folks, if you thought this was a 100% system, it's not. But let's say this signal did engage, and let's say we did place our stop right there. Okay, the market gave us a chance to adjust our stops and start to bring them down, but let's say we didn't, and okay, eventually we get stopped out. This is an amount I can afford. Is it unpleasant? Sure. I don't want to lose money, but I can take a little bit of solace in the fact that I have not damaged my account. I've only lost $200. I'm okay. I can still keep trading. Those of you who have been in the room with me before, I've shared stories with you that not once, but twice I have met people who have blown up a $20,000 and a $25,000 account respectively in a day. How do you lose $25,000 in a day? You have zero risk control. That's how you do it. Okay, so the market didn't have as much follow through. We got stopped on the break even. Did we get our profit objective? No, we came up short of the profit target on that one. That's all right. It was still a quality signal. It was still worth taking. And like Jim likes to say, break even is still a winner. So it looks like we're going to be in a little bit of a chop zone. We may get a soft edge sell signal here on the Raptor. We'll see how that plays out. We don't have the signal just yet. The Falcon, the trend line also starting to turn over here a little bit. So we did get the buy signal here, a little bit of a rally up. Now we're working on a trend change signal. This signal developed rather late. Normally it would develop right down here. You see where they were struggling right here? That signal should have printed right about there, but the parameters weren't quite right. Not everything, not all the ducks were in a row. Ivy asks, how many minutes do you use? These are not minute charts. These are the mean Renko bars from Indicator Warehouse. They come standard with the DTS system. They are also sold as an add-on. So it's a blend of the Renko bars and the candlesticks all into one. The thing I really like about these bars, and I'm a 5-minute chart trader. I cut my teeth on 5-minute charts. And when Adam came to me and said, hey, Eric, I want you to use these mean Renko bars, I was reluctant. I really was. But then once I used them for a week and I saw how well they showed you where the buyers are, where the sellers are at, you know, like it's very, very clean, very obvious. More information than you can get off of a time-based chart or even a tick-based chart. So, and we set the brick size via the data series. You're going to notice that some of these bars are thicker and some are thinner. That's the Indicator Warehouse dynamic equivolume bars. For those of you unfamiliar with equivolume charting, the fat bars have more volume associated with them. The thin bars have less volume. What always surprises people is that when a market is trending, the bars are thin because there's no resistance. But once the market starts to hit resistance, see here we're at the primary support line, this blue line, the market hits resistance, the bars all of a sudden start to get fatter because there's a lot more market participation. When that happens, we normally anticipate a turn. Here we are now on the secondary support line, the market kind of struggling a little bit. Not really committed one way or the other just yet. We're going to turn to crude oil here in a few moments because I think crude inventory is at the bottom of the hour. But you guys have got some great questions. TCAT asks, has anybody traded the system for World Cup advisors? I don't know. Well, nobody's mentioned it to me. Chris is asking for the link. One second here. This is for the results. I'll send it to everybody. It's indicatorwarehouse.net. And if you want more information about the tools and indicators and whatnot that you're seeing here, go to indicatorwarehouse.com. So I just put those in your window. Yeah, see, the choppiness is continuing. We're getting a red bar buy signal here. And what you could do, the red bar buy signal is actually our counter trend signal. You could set up to sell the failure of that. We're a little bit late. The failure signal actually came right here. I'm going to take it just below that low. I'm going to risk it up here. And again, this one's more for demo purposes, folks. This is not what I would consider a real quality signal, but it'll give you a chance to see how all this works. We should actually see a retest of the high here, though, shouldn't we? Should get a little bit of a test of the extreme before the failure. Dan asks, what is the difference between Renko versus tick versus time bars? Well, let me say that the DTS system, here I'm going to scrap this so I can show you. The DTS system actually works on, you can put it on a time chart if you want it. Right, so you still produce signals. It's just, it's perhaps a little bit more difficult to interpret the signals. Interpret the signals, wrong choice of words. The signals still produce. You're still getting a macro pullback signal. It just looks different, right? The bars are a lot larger. Time-based charts, of course, are based on so many minutes per bar. Tick charts, you can also use the DTS system with tick charts. Tick charts build the chart on so many ticks per bar. So you can see it's a little bit of a cleaner look. Again, we're getting the signals. There's a first micro macro cross signal, quality signal. This macro pullback got spoiled by the yellow bars, but still the signals themselves are working out. Here's another first micro macro cross signal. The bar sizes will change relative to how far the bar travels while it makes those 150 ticks, which is what I have it currently set at. The mean Renko bars kind of take all that and blend it together. So they have the benefits of a range style bar and the sensitivity of a candlestick bar. So with the mean Renko bars, each bar is only 6 ticks tall. And there is no time value here. So whether this current bar takes a minute to build or 10 minutes to build or an hour to build, it will only be 6 ticks tall. So it doesn't really give you so much a feel for market momentum, but it certainly gives you a good indication of where the real support and resistance areas are at, right? Like it's fairly obvious looking at this, hey, we've got some pretty serious support down here. And this was not so obvious when we looked at the time chart, was it? The tick chart may have shown it in a little bit more detail, but really for gauging where the buyers and the sellers are at, the mean wrinkle bars are pretty tough to beat. They also show you the sensitivity by incorporating these wicks and these tails onto your bars. So you get to see the price rejection that, okay, the sellers tried to sell it down. There was a rejection here of the lows and the buyers started to buy it back up. So you get a lot of information with these style bars. They're very, very telling. That's a good question though. Chris asks, you don't offer a trial on the system, why not offer a trial to the room? Well, that's what Wednesday is. Wednesday is a trial to the trading room. I also try to explain some of the features to you because you won't know what we're doing otherwise, but there's no quality trades going on here at the moment. And if here we've got crude oil. Now, crude inventory is coming out today, isn't it? I better double check my report schedule. Yes, okay. Crude inventory coming out in about 10 minutes time. Now, I'm going to show you how the OCO function works. One cancels other, that's what OCO stands for. If we click on this here, we can enter orders above and below, essentially bracket our range and let the sell stop and let the market fill our order. So whenever you have a market that's got a well-established range, if you want to do a bracket trade, then you can call on your OCO function. Your OCO orders are live the moment you put them on your chart, so I tend to place them away from the market and then drag them into where I want them to be. I'm going to use the primary resistance and the primary support, these blue lines, from our support and resistance suite. You see it's contained the crude oil market pretty well this morning, and we're skewered right here in the middle by the median line. So this is almost a textbook setup for trading crude oil. I am going to enable a stop, and I think I'm going to make it a little bit more, oh, you know what, let's go with the chandelier. The chandelier is a more conservative stop. There we go. So I've got a stop in play. I've got my auto stop in play. I've got my orders ready, and I'm all set for crude inventory to come out in about the next 5 minutes. Yeah, good observation, Tony. Tony says when you choose a new instrument to trade, i.e. you go to the you're used to trading the E-mini and you go to the NASDAQ or vice versa, you want to trade your signal for a while until you get comfortable with it. So let's say you just started trading crude oil and you're using your Falcon here, you're going to want to follow these trend change signals for a little while so that you get comfortable with them, so that you know you can trust them. A nice thing about trading though is you can do all this stuff in hindsight too, right? You can go back in your chart and you can say, oh, trend change signal. Okay, that worked out pretty good. Oh, where do we have another one? Here's a trend change signal actually that failed. It was a trend change signal. Was our filter in sync? Yep, filter was still in sync. Here's a signal that did not work out. That's something no other trading room moderator will show you. A signal that didn't work. Usually everybody just cherry picks their trades. But see, here's another trend change signal that worked out. Here's a late filter entry. Oh no, it got spoiled a little bit. But the point is, and it's a good point that Tony makes, you want to gain some confidence in your tools before you start going crazy with them. Yeah, TCAT says, bad day for a room trial. Yeah, the market's a little bit quiet today. The NQ is still drifting a little bit lower. We'll see here in a moment off of the crude oil market. I'll throw the Geiger counter up on here. Where'd you go? There it is. And we can watch the order flow a little bit. So the orders, actually not bad volume going into the inventory report. A lot of times we'll see like onesie twosie kind of stuff here. They're not going crazy yet, but oh, we're almost getting a trend change signal here to the downside now. We'll see whether or not crude oil actually falls off because of this. Chris says, if I want to buy a system a couple of Wednesdays isn't enough proof in real time that it works well. Well, yeah, I get your point. The fellow you want to talk to is Adam, and I'm going to give you Adam's email address. Actually, this goes for everybody. If you have questions or concerns, Adam is the fellow you want to talk to. And I'll tell you, Adam is very transparent. We're not here to snow anybody. Certainly not here to, convince you of something that isn't true. But yeah, if you have questions or concerns like that, please send Adam an email. He's more than happy to talk to you. Oh, way to go, Tony, knocking it out of the park. Tony says got a macro pullback on the NASDAQ. With 4 contracts, that's 96 ticks so far this morning. Way to go, Tony. So this macro pullback, I'm not sure which other, you probably meant the first macro cross. Probably nailed that one there because we don't have the macro pullback signal just yet. Or maybe Tony took the red bar failure here. You can practically make a living just trading the first macro cross. Oop, we're almost going into crude inventory. So let's watch crude oil first, and then I'll show you the first macro cross signal. So the Falcon here actually signaling that the market's going to head lower. We're going to leave the OCO order in place, but you know what? I would be tempted to short that. We've got a little trend change signal here. Trend line changes color. We have our little down, we have our up, we have our down, we have our signal. I would take it below the low, maybe 36.70. Short that. It's going to unwind here in a moment. The other shoe is going to drop. Okay, you can see the bar getting a lot more active. The Geiger counter is going to start going crazy here in a moment as the orders start to flip back and forth. The other way to trade the crude inventory is a friend of mine likes to let the report hit the floor, and then he allows that initial flurry to subside, and then he brackets that. So you see our primary resistance line so far, so good, held us on the right side of this trade. So there's a pretty big little buy bubble through there. It looks like most of it was absorbed by the sellers. Personally, I think the bottom is in crude. Long term. I think it's going to take a while, but I think we're going to see crude oil prices continue to rally over the next few months. Not full on make the news rally, more of a upward drift. It's just my opinion, of course. Well, we're still pretty much stuck in this sideways range. Well, that wasn't very exciting. I was hoping for more from the crude inventory. Nuts. Nobody's cooperating today. So they've taken out this little swing low. And we're still holding our primary support, but well, you know what I can do? Because this is a demo room, I'm going to show you how the OCO function works. So I'm going to bring this in a little bit tighter now. I'm going to bring it in right below that low. And I'll bring it in above the median line on the buy. This isn't a quality trade anymore, folks. I would still let it get outside of this range that we highlighted earlier, but I just want to show you how the OCO function works. That one actually does cancel the other. Working on a trend change signal to the downside now, so kind of confirming what we saw earlier here. Ah, there we go. Okay, so you'll notice we got filled on the buy order. The sell order automatically canceled. Trade Manager automatically gave us a stop, even though our stop strategy is way up here. See, the stop strategy is against us. The Trade Manager never leaves you without a stop. You can preset this value, by the way. So, and now that the stop is live, well, you can drag it wherever you want. All right, so that's how the OCO function works. Not the best signal though. Well, actually there was no signal there, but a chance to show you how it works anyhow. Chris asks, the OCO only works if you pay for the dome, or does your system do the OCO? It does the OCO on the charts itself, so it's independent of the dome. All right, well, we're just kind of floundering a little bit here. The NQ perhaps getting a little bit of traction. What I'm watching here is, see, our clouds are waffling again here on the Raptor. We got a bullish cloud, it goes to a bearish cloud. Now I'm expecting it's going to go back to a bullish cloud. Mike asks, what are the hours for the trade room members? The hours for the trading room are the morning session. So from the market open, we usually trade till about 11 o'clock Eastern. If things look really promising, we'll hold in till around 11:30 for the lunch hour break. And I should point out that the trading room is a trading room and a training room. So sometimes I will take the time, if you're looking for a trade call room, that's not it. It's there to teach you to learn to use your tools. If we happen to pick up some quality trades along the way, even better. Oh yeah, I was going to show you that first micro macro cross signal. But I'll take the time to explain stuff to you as well. So, you know, if we're looking at this green bar sell, I'll tell you why I think this is a decent green bar sell. And it's a decent green bar sell because we need a retest of the low before the market can reverse and head higher. So I'll certainly point trades out to you, and I'll show you how I would take them. But I may also get off on a tangent, which room members will tell you I do from time to time, and just explain stuff. So like, for instance, I mentioned to you that you could possibly make a living just trading first micro macro cross signals on your hawk. So there's a first micro macro cross. Ooh, here's a first micro macro cross. Did not work out. So that actually resulted in a loss. Here's the tip-off though, no test of the extreme, right? No retest of the low. That's what would have made that one a little bit of a nail biter. But here's one that worked. These are yellow bars, those don't count. This one, no, I'm not going to include that one because the macro line, it was too close. This one worked. It did give you a little bit of heat. Again, this is why we don't jam our stops in ultra tight, right? Sometimes the market's going to drift a little bit, especially during a trend change. See here too, no test of the extreme, no retest of the high. There's the retest. We knew which way the market was going to go, but we don't want to strangle the trade so we get stopped out before we can make our profit. Here's another first micro macro cross. Here's another first micro macro cross. Here's another first micro macro cross. So you see it's a quality signal, very, very high probability signal. Here's another first micro macro cross. This is a type of signal I almost take without exception. It's so strong. And again, this is one of these things you can convince yourself of just by going back through your chart. Now, if all you did was hold out for first micro macro cross signals, how many did we have there? Well, we had one here this morning. There's one to the upside. Here's one to the downside. And here's another one to the upside. So we had 3 signals this morning, and today is a slow day. So if on each of these signals you manage to take 2 or 3 contracts, let's say you took 2, that's $100 per trade, that's $300. It's not a bad morning for a day like today. Assuming you're going all in, all out, which is what I normally recommend. Sometimes we'll try to throw a runner in on the Raptor or something. Chris asks, what's the minimum account size for trading the NASDAQ? It depends on your brokerage. Some brokers will let you start with $2,000. Some insist you have 10,000. So talk to your broker. NinjaTrader will be the broker of choice for the NinjaTrader system. If you happen to live in a part of the world not supported by NinjaTrader, like me here in British Columbia, don't ask. It's a long story. There are other brokers that you can use. Mike asked, do you use EMA lines for the moving averages? Well, actually, I don't know. There were a few contributors to each of these tools. I think only the programmer knows all the bits and pieces. I do believe the Raptor uses, or pardon me, the Hawk uses an RMA, not an EMA, but not that it matters. Listen, folks, if trading were as easy as picking the right moving average combination, don't you think everybody would be making money? I should point out that there's a whole lot going on behind the scenes here as well. These tools have been stripped down to make them as easy as possible to interpret. So that's why we're looking for confluence in the signals. That's why these bars on the Hawk paint red, yellow, or green. Right? You can assume that these bars, with the tails down here, closed above the open, and that these all closed above the open, but there's no real traditional sense of whether the bar is bullish or bearish. That's all done for a reason. It's done so that it's easy, so that you concentrate on the signal itself rather than trying to interpret whether or not you have a signal. So when you know to look for a first micro-macro cross signal, you just look for what makes a first micro-macro cross, okay? Micro line crosses the macro line. It's the first signal that prints where everything is in sync. So we've got green bars, check. Green trend lines, check. Green filter, check. Green signal, yep. All right, let's place the order. And maybe we're going to risk it down here to the macro line. There's our trade. All right, so that was done with all the indicator warehouse systems. And I'm going to punch out of this. Yeah, there we go. That was done with all the indicator warehouse systems. They were stripped down. There's about a half a dozen things going on behind the scenes here that you don't know. Parameters that have to be met in order for a warning dot even to print. But the chart itself has been stripped down so that you can say, oh, okay, trend line changes color. Here's my trend line change signal. Here's my trend change signal. Red bars, yep. Red signal, yep. Red trend line and filter, yep. Sell it. Down she goes. We haven't focused very much on the eagle today because the market hasn't really been trending, so the trend trader not really giving us any quality signals. But if I go back here a little bit to where it was trending a little better, I can show you what an eagle trade would look like. One of our eagle trades that we look for is when the trend finally does change. Actually, let me go here to where the trend finally changes over. So we kind of get this cloud rebound crossover signal similar to what's going on in the Raptor. And whenever the market encounters the hard edge of the band, we anticipate a reaction. So you can see here we had what's called a red bar buy. Here we have what's called a green bar sell. These are high probability signals for the eagle. They always occur when the market drifts to the hard edge. So when the market starts to get toward that hard edge, our ears perk up and we start to pay attention. We sit up a little straighter and we say, aha, red bar buy signal. I know that's a high probability signal. I'll go ahead and buy it. and you can see we had some decent follow through. Green bar sell signal, yeah, I know that's a high probability signal. I'll go ahead and sell it. And you can see we had some decent follow through there. Not so much today. Today you can see the trade forecaster says we're in full on scalp mode for 20 minutes and then we go back to swing mode. So it's it's just one of those days. The market's going to keep waffling until we get some news. That's going to give us some direction. Okay, I'm just going to look here, make sure I haven't missed anybody's question. Chris asks, does the system enter the number of contracts or does it just print how many I would enter? No, it will enter the orders for you. That's the beauty of the trade manager. So if you get a signal here, this isn't a signal, but I'm just demoing. If you get a signal here and you set up your trade like this, and trade manager says, okay, Chris, for your account size, risking 2%, you can take 3 contracts. You submit that order and you get filled, you get 3 contracts. That's the beauty of this. It's all right here. This is the trade manager is a NinjaTrader strategy, and what that means is it places the orders for you. It executes the orders for you. Now the beauty of this as well is that if, let's say you're in a trade here and something happens, you lose power, your computer packs it in, a tree falls through your office window. These orders are still there. Even though you may not have power on your computer or something else going on, these orders are still at the exchange level. So we're currently not long, but once these orders fill, you will have your stop loss and your profit order in play at the exchange level. So that gives you a few moments to grab your cell phone, call your broker. You know, if anything like that ever happens, the best thing to do is just flatten your position. Just call your broker and say, where am I at? And if you're lucky, you're profitable, just tell them flatten your position until you can get everything cleaned up. So you can get that tree out of your office. No, good question though, Chris. That's a very important concept. All right, well, they're trying to plot a little bit higher here. So it does appear as though a slight upwards drift to the NQ today. If we can get above yesterday's highs, we'll be in better shape. So yesterday's highs came in at 44.87 3/4. Oh, well, there we are. We're trading 44.88. So we're right back at yesterday's highs. There we go. Nice little breakout through the top end there. The Falcon is being a little bit slow this morning. All this waffling and the lack of the volumes. You see how thin these bars are here? We should have printed another Falcon signal right here. This doesn't happen very often, but from time to time, you're going to get some market stuff going on where you're not printing a signal, but that's why we have the 3 tools, right? Even though the Falcon wasn't printing, we got a very clear first micro macro cross signal right here on the hawk. So even though the Falcon not printing that signal doesn't mean that you missed that trade, which is what tends to happen with most people. Yeah, the Raptor should have given us a cloud crossover here as well. So nice little buying spike there on the histogram there for the Geiger counter. Mike asked, do you wait for the arrows to confirm the entry? The arrow shows you that the price traded through the hash mark. That's what the arrow signifies. Sometimes, as I pointed out, I won't always take my entry right on the hash mark. You know, well, here, let's use the hawk, for instance. So we're producing a warning dot here on the hawk. Actually, let's take this one right here. So we're producing a warning dot on the hawk. The hash mark is right here. I wouldn't necessarily take it on the hash mark, knowing that the market topped out at 44.90 half. Maybe I'll enter 44.90 3/4, or maybe even 44.91. I'm allowed to, you know, delay my order if I choose, if I have reason to do so. The next bar, it filled. The arrow signifies that, hey, the market traded through the hash mark. And then from there, it kind of drifted a little bit. So had my order been 44.91, it would not have been executed yet. And I had my reasons for doing that. So the hash mark, like I say, just a suggested entry. The arrow signifies that the price actually traded through the hash mark. If the arrow confuses you, you can actually turn the arrow off. Oh, and I should mention the bar colors are all adjustable as well. People are always asking me, do I really have to have blue and pink on the Raptor? No, no you don't. I think I don't have my equivolume bars. No, I don't. There we go. I forgot to turn my equivolume bars on my hawk. Chris is stirring the pot here. He says, what's the normal risk to reward? I'm not a big fan of risk to reward ratios. I know that might sound odd. Just a second here while I wet my whistle, but this is a great way to finish off today's session. Risk reward. You're looking at basing a trade on something you don't know, right? We got a buy signal here. Do we want to buy it? If we use a traditional risk reward model, we would say, well, let's see, I'll buy it above here and I'll risk it below this swing, and I need to get 3 times my reward to make it profitable, so there's my trade. Let me ask you this. How do you know prices are going to go up there? You don't, right? So why would you decide whether or not this is an acceptable signal based on something you don't know? I don't believe in that. I believe you should base your trades on probabilities. So if you have a high probability signal, and you can set the signal, or you can take the trade and afford the risk. So let's say I'm going to enter here, I'm going to risk below the macro line. And I'm going to use my auto profit target. So I'm going to enter on the hash mark, I'm going to risk below the profit line, or the macro line. The trade manager says, hey, Eric, you can afford the risk and you can even take 2 contracts. Now, you're going to look at this and you're going to say, hey, this is a very lopsided risk-reward ratio, and you're right. But the probability that this trade will work out is over 80%. So the traditional risk-reward person would look at this and say, oh, I can't take that trade. You know, I'm going to enter here, I'm going to place my stop here. the market's going to stop here. I can't take this trade. I'm going to risk $150 to make 100. I can't do that. And what happens is you get left out and then the market does one of those, right? No, don't do that. Base your trade on the probability. So you've got a high probability signal. You can afford to take the trade. Oops, let's get the targets in there. I can afford to take the trade. Take the trade. If the trade doesn't work out, yes, I've incurred a loss, but there's an 80% chance the trade will work out. So I've made a profit. This loss is not a loss until it gets hit, right? Again, the other reason why you don't want to jam your stops in super tight. You don't want to get hit before you can make a profit. And almost every time the market will, let's say you chose to take this signal right here. If I placed my stop right here, and we're going to pretend for a moment that the profit target did not get hit, I would get stopped out before I had a chance to make a profit. Well, actually, let's use this macro pullback signal because it's perfect. So here's a macro pullback signal. Oops. If I place my stop really, really tight, I get stopped out before I have a chance to make a profit. Notice my risk amount, $300. I know this is a high probability signal, but I haven't had a retest of the high. What if I chose to put it way up there? What do you think the odds are that this trade will work out? Probably really good. Probably at least 70%, probably more, right? Because the market doesn't have to move very far to hit my profit target, and it's got all this ways to move before hitting my stop. And watch what happens. The market comes in and it drifts against me and it starts moving in my favor. Well, now all of a sudden I can take my stop from up here and I can roll it down to here, right? And I can start to roll and roll and roll. And let's say I only got this far and then the market reversed on me and stopped me out. Let's say it did one of those. I initially risk about $300. I get stopped here for maybe what, 80, maybe $100. So I've limited my risk anyhow, but at least I gave the trade a chance to work out. That's very important. So often I see traders, because people come to me for coaching, and I always see them jamming their stops in so tight because they're so afraid to lose money. This is a way that you can trade with very little stress. You set up your trade, you give yourself a reasonable stop. If the trade doesn't work out, it doesn't work out, but you haven't lost more than you can afford. There is a lot of comfort in knowing that. There's a lot of comfort in knowing that, okay, I didn't blow myself up today. Right? Okay, so I took a hit. I took a $300 hit. It's not the end of the world. But as an example, and some of you will have heard this before, but I worked with a fellow. He came to me one day. He was quite upset. He said, Eric, I just blew $600 today trading gold. I said, how could you lose $600? I made $1,000. So here we are trading the exact same market. He loses $600. I make $1,000. What was his problem? He jammed all his stops in so tight, he got stopped on every tiny little reversal, never even gave the market a chance to get to its profit target. I gave the market a little bit more room. I set a reasonable stop, never ever risking more than I could afford to lose. But I gave the market a chance to hit its profit objective. It's a very important concept, and one that most traders sadly never get their heads wrapped around before they lose all their money. I'm going to show you guys a little tool here as we close out, but there's a couple more questions. That's an excellent question, Chris, though. I'm glad that you asked it. Mike asked, are there 3 long signals after the micro-macro cross valid signals, maybe just not high probability trades? So what Mike is referring to is we've got the first micro-macro cross right here, and then we've got 3 other signals here. Would I be interested in taking those? Well, they are signals, and unfortunately, they're only signals that are valid in hindsight. When those are developing real time, it would have been harder to catch that. But Tony just pointed out, hey, Eric, we just had a 4-arrow consolidation, and the 4-arrow consolidation is one of our high probability signals, and it developed right here. So even if you missed the first micro-macro cross, and remember, there's audio alerts with all these, so it's really hard to miss a signal. But if you happen to miss that first micro-macro cross, you come back here and you hit the macro or the 4-arrow consolidation. The thing, again, that I'm going to try to drive home to you guys is everybody thinks that in order to make more money, you need to trade more. No. In fact, the more you trade, the more likely you are to lose money. What you want is you want to capitalize. You want to capitalize with your maximum position size on high probability signals while not risking more than you can afford to lose. I'm going to say that again because it's very important. You want to maximize your position size on high probability signals while not risking more than you can afford to lose. I usually trade 2 or 3 times a day. That's all I'm looking for, is 2 or 3 quality signals. And honestly, you can have a 4-figure day doing that. It's easy. Well, I'm not going to say easy because I can get in trouble for saying easy, but you can make 4 figures a day trading no more than 3 times a day. The money, unless you're a high frequency trader trying to scalp in and out for a micro tick, which is not feasible for you and I to do. You want to concentrate on finding your high quality signal. So here was a high quality signal. Here was a high quality signal. And this is just the one tool. Here was a high probability signal. Here was a high probability signal. And this is the Hawk Scalper, right? So it's going to give you more signals. 1, 2, 3, 4, 5 high probability signals. Even if you took only, if your account size allowed you to take at least 2 contracts on each, that would be $100 per. That would be a $500 day. And that's just the one tool. What a lot of people don't understand is, again, it's not in the frequency. We don't want to be chasing all these signals. Did you know that if you trade just twice a day and you make $50, or pardon me, $100, sorry, I'm getting myself all confused here. If you traded just twice a day and you made $50 per contract, you would make, and you traded 25 contracts, you would make $500,000 a year on 2 $50 trades a day. $500,000 for 25 contracts. Okay, you say, well, sorry, Eric, I can't afford 25 contracts. Well, what about 5 contracts? That's still $100,000. Can't afford 5? What about 3? That's still $60,000 a year on 2 trades a day. Even if you can only do 1, that's an extra $20,000 a day for finding one $50 trade. That's the true secret in trading, folks. It's not finding more and more signals. It's finding a high probability signal, capitalizing yourself correctly, and taking advantage of the signal. Honestly, my trading day would be done. I would bag my 3 or 4 signals and say, all right, thanks very much, see you later. Very often in the trading room, I want to close the room down after the first half hour, 45 minutes of trading. I don't, because, you know, we go on and I show people stuff. But really, during that first hour of trading is usually all the time you need to earn your money. I promised I would show you another tool here. And I get a little bit carried away with this sometimes, and I apologize, but I see so many people getting so much bad advice. Here's a little tool that you can play with. If you go to indicatorwarehouse.com/moneyexpert, this is going to be, yeah, like Tony says, he did 2 trades today. He bagged 96 ticks. Knocked it out of the park. Ivy asks, how much for the indicator? The information, the pricing information is on the website. I'm not going to go into it here. Or you can email Adam, and he'll do bundles for you as well. He'll do bundles and offer you discounts and that kind of thing. So contact Adam. And I'm going to just deal with Chris's question before I get onto this. Chris asks, you prefer to trade the NASDAQ? Yes, I do. The NASDAQ and the E-mini pretty much move together, but the NASDAQ is half the cost. So at $5 a tick versus $12.50 a tick, I get to take at least twice as many contracts. And the beauty of that is that it gives me more management opportunities. So whereas I may only be able to afford 1 contract in the E-mini, I can afford 2 contracts, sometimes 3 in the NASDAQ, depending how the entry and the exit are structured. So that means I can scale out of a position. You know, I've got more management options. What a lot of people don't realize is that if the E-mini moves $200, the NASDAQ or the mini Dow are also going to move $200. It's not like the E-mini moves 40 ticks and the NASDAQ moves 40 ticks, but because the E-mini is worth, you know, $12.50 a tick, all of a sudden you've made $500 profit, whereas you only made $200 profit in the NASDAQ. No, it doesn't work that way. And it's not a dollar for dollar ratio, but as a general rule of thumb, if the E-mini moves $200, the NASDAQ, the mini Dow, the Russell, the mid cap, they're all going to move about $200. So why would I not trade an instrument where I can perhaps get in there with an extra contract, put in a runner, and that kind of thing? Gives me some flexibility. That's why I'm keen on the NASDAQ. But here, this is a tool I want to show you, and I encourage everybody to play with this. Show yourself that this truly works. So here's Joe. Joe wants to be careful, so he's only going to trade single contracts, and Joe starts with $10,000. 100 trades later, he's run it up to just shy of $18,000, which is really good. Now, what if we had done it with position sizing? Okay, I hate figures like this. Let's go to another chart, because that's not realistic. Actually, let's do it like this. Come on. These are all randomly generated, by the way, folks. Doggone it. I want to find one that's a little bit more realistic. Mathematically, okay, this is better. So Joe starts with 10,000. He has some ups. He has some downs. He finishes with 13,500. If we had used, oh, shoot, okay. The math behind this is true. The chances of you actually turning 10,000 into 2.2 million after 100 trades is kind of slim. But what I want to show you is that it all boils down to this. So you start with $10,000. Our system is only 50% profitable. We are only right half of the time. But what's our saving grace is we are only going to risk 2% of our capital. Okay, so here's, oh, I like this. This is very realistic. So here's Joe's curve. He starts with 10,000. He ends with about 13,500, just shy of 14,000. Ours is the green line. The blue line is a single contract. We're position sizing here. So we're adding contracts as our account allows, but never risking more than 2%. And remember, this is only a 50-50 system. So when Joe wins, we win. When Joe loses, we lose. So for the first 20 or 30 trades, we're pretty much lockstep with each other. Then Joe hits a bit of a losing spell. So do we. We lost a little bit more than Joe did, to be sure. But look at what happens. Joe starts to hit a few winners. Our winners, look at how our winners gain so much more than Joe. So we start to lose again. Okay, we've lost, but we've lost proportionate to our risk, right? We haven't lost more than we can afford. So we both start with 10,000. Joe ends with just shy of 14,000. We end up with about a little over 15,000. We earned an extra $1,000 for doing nothing more than correct position sizing. Let's do it again. This is good. This is a very realistic one as well. Joe starts with 10,000, 100 trades later, he has $11,500. We start with 10,000, and yeah, some of our drawdowns were a little bit more extreme. We hit a little bit of a losing streak here, but look at what happens when we're profitable. We earn more. We don't lose more than we can afford, but we certainly earn more when we win. So we actually finished with about $13,500. We've made an extra $3,000 doing nothing more than correctly managing our trades. This is how you make money. It's not being right all the time. Put that out of your head. Nobody is right all the time. But when you're wrong, you don't lose more than you can afford. When you're right, you maximize your earnings. Very important concept. Like I said, if you take nothing else away with you, please learn that. Nice little feature here is if you click on this chart, you can actually see how the trades broke down. And you're going to see, and I spoke to the programmer when he programmed this, and I said, I don't want you putting in any home run trades here. I don't want you putting in, $1,000 trade to skew the figures, because that's not fair. How often do you hit a $1,000 home run trade? Probably not very often. So these are all your bread and butter trades. See, there's a little $50 trade here. There's a $250 trade here. He structured it on the E-mini, by the way, because you can see here's a $12.50 trade, $12.50 trade. But these are all your bread and butter trades, right? And you're going to see these are all just onesie-twosie type trades, $100 here, $100 loser, $125 loser, $112 winner. No real home runs. This is the biggest trade right here. It looks like $400. But look at what happens when you start to position size. That $400 winner, because you correctly capitalize your position, was an $800 winner, or pardon me, a $1,200 winner. $800 difference. So sure, you had a winning trade, and so did I. I made $800 more than you, and I did nothing different except correctly position, or correctly capitalize my position. And that is what's going to make the difference in your trading, folks. So take some time, play with this. This is fun to do. What if your position is only 45% profitable? You lose more than you win. Okay, well, we did no worse than Joe. We're lockstep with him there. Oh, look at this. Also very realistic. We are losing more often than we are winning. Joe starts with 10,000, manages to get up to 11,500. We run it up to $14,000, doing nothing different. Joe wins, we win. Joe loses, we lose. We lose more than we win. In fact, one of my most profitable months, I was running about a 40% win ratio. I was losing more than I was winning, and it was one of my most profitable months. Very important concept. All right, so that's what I'm going to leave you with. Next week, I'm not sure what's going to be going on for the demo room next week, folks. I'm out of town, going to be out of town for a couple of weeks until the end of the month. But I'm sure Adam will let you know what's going on. He may even step in and demo the room, or he'll work something out for you. All right, you guys, on that note, we're going to button up shop. DTS owners, I will see you in the room tomorrow. And yeah, hopefully we'll have a little bit more active trading session. All right, you guys, we'll talk to you later. Bye for now.